Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Bread Financial Holdings, Inc. Annual Report. Bread Financial Holdings, Inc. offers a wide range of businesses and services that cater to customers and consumer-based industries in North America. At the core of its offerings are credit card and loan financing services, including risk management solutions, account origination, and funding for private label and co-brand credit card programs. The company also provides marketing, data analytics, and servicing capabilities for loans it originates for various credit card programs. Additionally, Bread Financial offers an enhanced digital suite that includes a unified software development kit, allowing merchants to integrate online point-of-sale financing and other digital payment products. Its services are offered under several brands, including Bread, Bread Financial, Bread Cashback, Bread Rewards, Bread Pay, and Bread Savings. Through its digital payments platform, Bread allows merchants and partners to integrate various financial products, making it a one-stop shop for customers seeking flexible payment options. Overall, Bread Financial Holdings, Inc. provides a comprehensive suite of businesses and services that cater to the evolving needs of consumers and merchants in North America. The recent surge in Bread Financial Holdings, Inc.'s BFH stock price can be attributed to several key events that have taken place over the past year. One of the most significant factors was the company's Q4 and full year 2025 earnings report and dividend declaration on January 29, 2026. This announcement led to a notable increase in the stock price by 7.08%. The scheduling of the Q4 earnings call earlier in January also contributed to a positive reaction, with the stock rising by 5.19%. The company's participation in financial services conferences further boosted investor confidence. At the Bank of America 2026 Financial Services Conference and the UBS Financial Services Conference 2026, Bread Financial presented its strategic transformation and future outlook. The CFO highlighted the resilience of the consumer base, operational efficiency, and strategic growth initiatives, including new partnerships and AI projects. These presentations generated positive sentiment around the stock, contributing to a significant increase in the company's market value. The cumulative effect of these events has resulted in a 15.54% to 16.5% increase in Bread Financial Holdings stock price over the past year, which is below the 18.16% threshold mentioned. However, the upward trend indicates a strong performance by the company and its ability to attract investors despite market fluctuations. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for this company are largely influenced by its core business activities. Net interest income from securitized credit card loans is a significant contributor to revenue growth, as is investment in securities. Additionally, the company's ability to originate new credit card sales and loan originations also plays a crucial role in driving revenue. However, there are several risk factors that could impact the company's financial performance. Credit risk associated with securitized credit card loans poses a significant threat, as does interest rate risk related to investment securities. Furthermore, regulatory risks, including compliance with consumer financial protection laws and potential litigation, also pose a challenge. The company's financial performance has been impacted by higher interest expenses and lower margins on credit card sales, leading to a decline in net income. The increasing debt-to-equity ratio may also limit the company's ability to access capital markets. Net income experienced significant fluctuations between 2022 and 2025. In 2023, net income plummeted by 61% to $718 million compared to the previous year. This decline was followed by an even more substantial decrease in 2024, with net income dropping by 87% to $277 million. However, in 2025, net income rebounded sharply, increasing by 87% to $518 million. The changes in profit margins are less straightforward due to a lack of explicit data for certain years. Nevertheless, it can be inferred that the net interest margin decreased slightly from 18.5% to 18.4%. On the other hand, the return on average tangible common equity, ROTCE, showed a notable improvement, rising from 11.4% to 20.4%. This increase suggests that the company's ability to generate profits from its core operations improved significantly over this period. The company's financial performance indicates a consistent generation of positive operating cash flow. According to the provided summaries, the net cash provided by operating activities for the year 2025 was $2.1 billion. This is further supported by the operating cash flow being explicitly stated as positive on page 78. Additionally, although not explicitly mentioned as a positive number on page 103, it can be inferred to be so based on typical accounting practices and the context provided. The data from page 108 also reinforces this conclusion, showing that in both 2025 and 2024, the company generated significant operating cash flows of $1.234 million and $1.045 million respectively. These figures demonstrate a consistent trend of positive operating cash flow, indicating the company's ability to generate sufficient funds from its core operations. Management is cautiously optimistic about the company's outlook despite a decline in net income. The revenue growth of $4.2 billion is attributed to an increase in consumer spending, indicating a positive trend. However, the decrease in net income is due to higher interest expenses and lower margins. The management highlights that credit quality remains stable in 2025, which suggests that the company's risk management strategies are effective. The company's ability to manage its exposure to credit risk is crucial given the regulatory risks mentioned earlier. Management's discussion also emphasizes the importance of managing interest rate risk through derivative instruments. This indicates a proactive approach to mitigating potential risks and maintaining profitability. Overall, while there are some challenges, management appears to be focused on navigating these issues and positioning the company for future growth. The acquisitions and divestitures of the company can be summarized as follows. Acquisitions are transactions where the company purchases assets or businesses from another entity. In this case, the company made several significant acquisitions. On page 26, it is mentioned that a loyalty segment was spun off in November 2021. However, on page 45, it is stated that the same Loyalty One segment was actually spun off into an independent company called LVI in November 2021. This suggests that the initial spin-off may have been a mistake or a miscommunication. The company also acquired a credit card loan portfolio by December 31, 2024, page 78. Securitizations are mentioned on page 108 as not explicitly stated as acquisitions, but can be considered a form of divestiture. However, this is likely an error in the summary, and securitizations should be classified as a type of financing or risk management strategy rather than an acquisition. In terms of divestitures, the company spun off its Loyalty One segment into LVI in November 2021, pages 26 and 45. Securitizations are also mentioned on page 108 as a form of divestiture. However, it is worth noting that securitizations can be both an acquisition and a divestiture, depending on the context. Overall, the company's acquisitions and divestitures were primarily focused on its loyalty segment and credit card loan portfolio. The spin-off of Loyalty One into LVI was a significant transaction, and the acquisition of the credit card loan portfolio will likely have a lasting impact on the company's financials. The company has a history of rewarding its shareholders through dividend payments and share buybacks. Since October 2016, it has consistently paid dividends on its common stock, with a quarterly cash dividend of $0.23 per share declared in January 2026. In addition to dividend payments, the company has also implemented share repurchase programs approved by its board of directors. These programs have allowed the company to purchase shares from the market, with a notable instance being the repurchase of 1,937,540 shares in December 2025. Furthermore, the company has authorized up to $200 million for future share buybacks, demonstrating its commitment to returning value to its shareholders through both dividend payments and share repurchases. That concludes the financial summary for Bread Financial Holdings, Inc. Feel free to comment below, and I will be happy to answer them when possible.